Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. Just double checking to make sure everything's good with the sound. All right. Good morning, Patrick. Good morning, Gary. Morning, Dew, Rams of Fall. Good morning, Jacob. Hello, George. Another 3% Thursday. Hi, everybody hiding behind the scenes. Finally getting the pullback. Oh, finally. So, let's see what we got going on. We've already had Bostic speaking. We've had Bullard's remarks, even Dovish. I forgot the exact thing, but even using Dovish inputs, it's like rates should be 5 to 7%. Throwing some water on the fire short term. Remember, big thing is OPEX tomorrow. Building permits already, housing, so we know is in the toilet. So it doesn't matter. Philadelphia Fed, I told you I was going to watch this one. This big manufacturing, look at that. Even though forecast is still negative 19.4. And Fed employment index plummeting and prices paid still holding strong. That was not bullish either at all. That is a pretty bearish number. Continuing jobs claims coming in slightly higher than expected. Remember, for back in, how long ago was that, Patrick, when we had the continuing jobs claims rise above on a percentage basis. The key number, it was like 1456. That happened a while ago, which was a very strong indicator of a recession is baked in. Still holding above that number. It doesn't matter at this point because it's already baked in the recession. Where's initial jobless claims? Initial jobless claims coming in a little better. So no worry yet with initial jobless claims. Continuing jobless claims keep climbing, but not to an extreme level, although we are going into a recession as we talked about. Well, we've talked about that for a while. It's just the timing of the exact date they'll label the start. I think it will be sometime, it'll get officially labeled sometime in the beginning of next year. We still got Bowman. Again, didn't schedule it with this live stream. But speaking in a few minutes, Mester speaking, Jefferson speaking, Cash and Carry speaking. Cash and Carry speaking twice today. Can we not get enough of that? Kansas City, Fed Composite and Manufacturing Index, expecting both those to be in contraction also. So, lots of stuff. Lots of red. Look at my little Cisco. Cisco, the little greenie in the sea of red. Finally getting the pullback. Tesla, boy, has anybody been following the Elon testimony from yesterday? Oil pulling back, closing in on that key level I was watching. Lots of profit taking going on. Macy's was up this morning after a beat. Nice gap up in Macy's. Baba was down. We'll get to that in a second. Pretty much nowhere to hide so early this morning in any of the sectors. Everything going down, as you saw from the heat map. Let me refresh this one more time. We're still overall in greed index. So let's see where this sits right now. Just out of curiosity, should have refreshed the top. 80 back to 80-20, but it's still this 50's baked in. Not much is going to happen there, as I talked about. Alibaba was a gap down. I think it beat on EPS, missed on revenue. Macy's beat. Kohl's I did peek at, but it was down a little. I know it beat on EPS. I don't remember the other thing. Applied Materials after the close. NVIDIA actually holding up quite well after hours in the conference call. So that was very interesting. All right, let's see who is here. Am I sure I'm not a perma bear? I never see this satisfaction when we were rallying. Oh, I was just wanting the pullback to get the cycle bottoms. We're not done. Look, this is nice. This is finally nice. Because the longer stuff stays pins, the more fragile it gets. I told you, Thanksgiving week's notoriously bullish. I still have some bullish patterns left to play out, but long term, I'm still bearish. So is that a perma bear? Is that a perma bear when the signals, long-term signals, stay still bearish, but there's short-term bullish rallies? Remember, time frames are everything. And I love rallies because you can get better, higher levels for putting back on shorts. This isn't unexpected either. I've talked about this for a couple weeks. This weekly cycles at the top, daily cycles getting to the top, watching for them to roll over and how big the pullback is. So far on the S&P level I've talked about the last couple of days, right in front of this 3,900, pulling back finally to the daily rotation zone. This is the first level of key support. Talked about if we started to break down below the 3963, which we did in the European session, we're into a clear path move. Return to the 50% harmonic. 39, it's a zone in here. You have the prior breakout zone, the 50% harmonic, but we had a clear path move. The next support, if it continues lower, isn't that down. The next major support is until 38.43, which is a decent, significant level. That's why I'm not going off the candle bodies here, because there's a significant level at 38.40, roughly 38.43, 38.44. This is going into the CPI candle also from last week. However, there is a lot of strong support down here. So that's where I'm watching. Not tipping overly bearish unless we really break below this 3,900, retest and roll over. We got OPEX tomorrow. We could still get the pin. Overnight, by the way, we talked about it yesterday on the live stream. If you're not watching all the live streams, I don't know why. The little double bottom never triggered. Never even confirmed. Always like to leave things on a chart if I can. Then you had the breakdown. This is really nice. The breakdown, retest, especially of the candle bodies that were established last night. This is a little great example. Breakdown below a key level we identified before. Retest of the candle bodies right here, and then the bigger rollover. So that's the exact kind of thing I'm watching around this 3,900 area. Back to the upside, should we get a little bottoming pattern in here? Now, this is a pretty decent advanced clear path on the 1 hour. So you go down to the 15-minute. You know, there's a little pausing area right around 39.25, somewhere around 39.40 to 39.46. You can put on your retracement harmonics, and these are for people trying to micro trade this. And then you look up the levels. You look up, all right, so 39.42 would be an area. Now, if we push down, I'm going to have to ratchet those down. But why would I focus on that area? We have this pausing area and a harmonic and a 15-minute rotation zone. Just an example. Where else do we sit? Good morning, Sterling. August, I believe. Thank you, Patrick. So we've been identifying that since August, Patrick. How's that notebook going, Patrick? Good morning, Sashi. Why are they speaking too much? They like to hear themselves talk. They think they're providing more clarity for the markets. I just think they provide more distractions for people, whether they want to latch on to any single thing. People are trading the Fed at this point. I wish I had more time to put out videos because I was wanting to do a video. Are people trading the Fed, not the markets? And that's what's going on. People are still overall ignoring a lot of the macro stuff. That's why I'm still very bearish long term. People are trading the Fed. What's interesting is people started to say, oh, the pullback this morning happened. It started happening in the European session with the breakdown. You can't go off one. You're bullish, George. Last Thanksgiving week was red. Any week could be red. It's notoriously a bullish bias week, especially the Friday after Thanksgiving. So what am I focused on? If we get a little more pullback to get daily cycles to the bottom, then I'm focused on the counter trend pop And then we could be setting up. I think there's going to be a rug pull before the end of the year, but I need a signal. I need a systematic signal. So just like this, not an overreaction, because is there a great, fantastic long-term short signal? No. There was a breakdown pullback short-term short signal. When we get the next bounce, and we will get a next bounce unless something catastrophic happens, we could set up for a more substantial shorting signal going sometime into year end. Key line in the sand, for those playing along at home, is all the way back at 3708 area. We got a ton of support coming in before that. Before we'd have to make a pretty big plummet to even trigger that, and that would be below the channel area, below the daily rotation zone, back below the 50 EMA, back below another key support area. There you go. Yeah, Ross, we'll take a quick look at KSS symbol for Ross. Thank you, Sterling, for the super chat. Took the 4-hour double top trade in RTY. The Russell, after triggered, rebounded candle bodies. Thanks for teaching us. You are welcome, Sterling. Thank you for the continued support of the channel. Yes, golf clap for Sterling. Let's see. Thank you. Good morning. Can you check? There's so many people that trade like one or two stocks here or always ask for the same stocks. It cracks me up. So keep an eye on these cycles when they get to the bottom. The only hiccup is with OPEX tomorrow. And it's very still tilted with the call-put ratio for continued bullish. We just dropped below the 11,632. Now back to the daily rotation zone. My major next level support is until 11,420. Cycles heading down out of overbought condition. For the sake of completeness, that little mini double never triggered or confirmed. And these were the potential overnight rally levels that never triggered. You got the break below. And now with the old Bullard, the Bullard comments pulling back, you can see here that 39, 11,416, 11,440 is the next area. And you had this little pausing bit after the CPI release. So that is key on any pullback. Cannot do anything from a more bullish perspective, at least until it gets above 11,635. So, was that a... This can almost be utilized with this area. I should have put this up there earlier. With this for targets, I might as well get them up there now, just in case we need some other targets. So here's the next target levels that you can utilize throughout the day: 11,540, 11,450. So I'd be watching anywhere in here on a continued sell-off today for a pretty decent support level. The next level, 11,500, what is that? 11,543, 11,550 area. Look in there. So Dow, we'll get to the spiders and the Qs in a second. Sitting against the 33,200 area right now, which we identified before. If we get the continued pullback below there, it's 11,322. Besides using some harmonic levels. To the upside, can't again get bullish until above 11,340. Russell, which Sterling was talking about, had it trigger yesterday. This was the one that did trigger. And now first target, second target, both hits. The final target is 1820. Key resistance, I would be watching back at 1842 on a little bounce. Can't get bullish in the Russell until back above 1857 at least. Let's get to the spiders and the Qs. The spiders and the Qs. Pre-market 390.69. Major support level coming in about 390, just in front of 390. So you got your daily rotation zone just above there, but 390, right around 390.40. You drop below there. There's not much until 387.50 besides using very minor levels. And back on that 4 hour, that's the bottom of the 4 hour rotation zone. So I'd be watching this key, this 3 on a bigger pullback, 388 to 387.50 area. Then you have that gap fill beyond there, but that's going to take a lot. Cannot get short-term bullish until above 394.41 again. In the Qs, key levels hooking up 50, the daily rotation zone coming in about 281, and then right below that 280.50 is my support zone. Right now we're at 281.24. Of course, anything I'd be utilizing gap harmonics, which I didn't mention on the spiders and the Qs, but the key resistance is now about 284.60. Next level support 277.30. Let's check that on the 4 hour. And minor level would be right about this 280, yeah. 280 to 280.50 right in here. If we do get below that, there's not a lot of key support until we get to that lower end, and I would be watching the bottom of the daily rotation zone, this 277.30 area. Where else? Good morning, Anissa. What else do we have? The DAX finally. Very minor pullback, not even back to the daily rotation zone or below Tuesday's lows. So that's what I'm watching is Tuesday's low, 14,142, and just below that 14,100 is key support in the DAX. Pullback right in front of the harmonic and the first level. Like we talked about already, more aggressively raising stops in here. But the key support is at 112.07. to about 112.04 on a pullback level. That doesn't even take it back to the breakout point on the double. Dollar index finally recovering. Watching for a continued rally to 107.30 for the first level of resistance, and you had a couple key lows down there. And this is where the low will match. This is where this key low, come on. That's why. That key low area will matter with the declining rotation zone. Just trading above a little resistance right now. But I'm going to be watching on a closing basis. This is about 106. I'm going up to about 106.80. 80s and 20s are key in the FX market. VIX. VIX, so far, just a little channeling move back up, utilizing about 25.30 as resistance going into this morning. If we do get above there, the next key level, which would continue the bearish, short-term bearish focus, is about 25.65. Crude didn't get quite back to 87.5, but now key. There's just no great trade as long as it's sitting in this book for me besides micro trading. But key resistance is back at 85 now. Still expecting a retest of this low area from mid-October. What else do we have? Pound pullback, watching this daily rotation zone. Talked about that before. Nothing's changed. Euro pullback, watching this low area 102.80. And then below that, it would be about 102.50, but this doesn't change anything besides a pullback with cycles rolling over. Finally, we're finally getting a cycle reset. Bitcoin, not much to talk about there. Still in consolidation. The FTX bankruptcy is going to be a complete and utter joke. Tesla, this traded below the 75, which is the walkaway level. So the head and shoulders is done, is over. 180.10. 177.14 is the low area. I'll be watching to see if that holds. If we break both the lows, the next targets are 169.59 and 162.04. Anything other than that would be interesting now. Besides the gap play, 186.01 is a key resistance going into the open. What else do we have? We wanted KSS. Coles. Gap down. What? I'm just double checking. Yeah. Beat on earnings, missed on revenue, and gap down. So your resistance now is, first level I'd be watching is back to 29. Your key support, let's see if we can find a significant level, is coming right around 27. Other than that, it's caught in just major channel. So that's about it. Not much to talk about there besides short-term plays, and the only other short-term plays would be your gap fills. But your key support's coming in at 27.02. No, it wasn't asked for it, but Macy's looks like it's going to turn this potential double that is not confirmed or trigger jet into a possible triple. So going to still keep an eye on that. But the 200 again is about 201. It's trading just in front of there, and we still have a potential gap play up there. So that's what I'm watching right there. Baba beat on EPS, missed on revenue, gap down. So now your key resistance is back at 78. But remember, you have gap fill plays. And even before the close here, would not ignore about 73, 73.16, 73.20 area for the potential level of support for any downside trades. Still coming out of overbought with cycles at the top. So keep that in mind. Come on. Netflix, your support's coming in about 291. You're still trading 294. 291 is a pretty significant area of support. You break below that, your next support zone is about 281 to 274. Close below 274 could be a front run pattern for the bigger double, but as long as it holds up in here, it's still an orderly pullback. Keep in mind though, 300, 299.80, 300 is now key resistance on any bounce back rally in front of the gap fill. mRNA 178.60 is first level support. Then 176.23, way overbought, cycles at the top. So I'd be watching for the bigger pullback, and the bigger pullback could easily even get back to 160, 162 to 164 area. So be prepared for that with your positions and your trailing stops. NVIDIA. Still, I put this out. Your key support's back at 145. We'll still be watching for this potential gap fill play, not necessarily today, but once the market does firm up. You break below 145. Again, not necessarily for today, but you do have this gap. Would not ignore the gap open, but everything else is getting out of this major overbought. Still cycles at the top. This needs to pull back. Then we'll see. Nothing has changed in the short-term bullish play besides a pullback. On the next pop, we could be setting up for a more bearish topping pattern. Yeah, John, there's not much going on in BTC. Just pay attention to what's going on with FTX. There's going to be much more Ripple, Genesis. This is nowhere near over, but so many people between the wash trading going on Bitcoin, trying to keep it up, and people converting other assets into Bitcoin, it's put a temporary floor underneath. But once this temporary floor breaks, watch out below. Watch out below. And good morning, by the way. All right, 1 minute to the open. I think we covered everything. Lee is, oh, it'll get there, Lee. It'll get there. We've talked about those levels for months. Just want to check this into the open, still holding this key support zone. So really pay attention. 8:30, let me just check the tick, see how negative it opens. Pretty negative tick reading on the open. So lots of selling pressure going into the open. So it'll be minus 400 for me to watch for any substantial change in the tick. So with this negative in opening, it's going to be watching to see on a follow through with the S&P if it does get follow through. So far, no follow through. So this could be the negative, and yes, that is a very mini double. With that, I am wrapping it up. What is this? Coin CFO says bankruptcy was unlikely, not impossible. I'll have to look more at some stuff that's coming out now. I have to jump watching this little double going into the open. Talk to everyone after the close. Bye for now.